Welcome back. This is Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, yesterday we had a few stocks that were moving around in trade. And one stock that was under pressure was actually Voltas. Let's talk about the consumer durable stocks. In yesterday's trading session, there were a couple of them, besides Voltas as well, that was down. And this is surprising because summer demand is shaping up quite well, which in fact should be good for them. Praveen Sahay, the research analyst at PL Capital, joins us on the show. Hi, Praveen. Good morning and good to see you in as always. Praveen, what was the reason for Voltas to see that sort of a sell-off? Everyone's talking about pre-buying. They're saying that, the compressor shortage will not be a factor, at least initially, unless demand is very, very strong. Why was Voltas down close to 5-6%?
Yeah, hi, good morning, everyone. So basically, see, if you look at for a Voltas prospect, definitely you are right that summer has been, so far has been good, and the way forward also the severity of the summer is expected to be a very good. Definitely the volume growth for the industry is expected to come in. Few things about the Voltas because Jan, Feb, March, usually for them, they lose a market share to the second and third years. That's a trend from the last 4 years, and that was a visible one. Second thing is there is a escalation in the prices, the cost, and that is not able to pass on. So that is the the another reason that the volume is going to be a good, but the margin may see some under pressure. Being one of the good quarter, the fourth quarter and the Q1 are the usually seasonally better quarters. And in that, if the company is not able to pass on the prices, increased cost, then definitely that's one of the concern. So I believe...
So,
sorry.
Praveen, you're saying they could potentially lose some market share because the volumes may not be as much, and margins as well could be under pressure because input costs have gone up. Is that correct?
So regarding the market share, it's a usual trend from the last 4 years, and usually it gets recovered by the first quarter.
Okay. By the way, the rupee has opened, and there's fair amount of weakness that we're seeing. Yesterday, I think the money markets were shut, banks were shut because first of the financial year. Now we have the opening. 85.68 is what we're getting on the rupee. Okay, Praveen, hi. I was going through your note on fans, and that's where you were pointing out that I think third quarter, most of the companies undertook some price hikes. And you also say that Havells and Crompton, they've more or less managed, they've maintained their market share and they're seeing stable demand in their regions. So let's talk about this space. And I just throw in maybe a Symphony here as well. I don't know if you track that stock or not, but in the fans and cooling space, which is your preferred stock and why?
Yes, so my preferred preference right now is RAC because the room air conditioner growth is quite huge or strong. Now coming to the the another seasonal product, which is a fan, and in this quarter, the fourth quarter, we had seen there is a good improvement in the prices, so around 2 to 5% of increase in the prices across the brand. And in our channel check, that reveals. Second important thing is the inventory level at the dealer has been very strong. So that has above average. So that indicates that the primary sales has been also good for the fourth quarter for all the brands, and especially for the Crompton and Havells, because they were sitting on the higher base of a last year fourth quarter. And if the price hike and the good primary sales, that indicates a good number for their ECD portfolio for this quarter.
Okay. So Crompton and Havells, you like these two stocks. And room air conditioners, like you said, you spoke about Voltas. What about the others, Blue Star? Which would be your preferred pick? Which company is showing the maximum, the expectation in terms of growth as well as decent margins?
So the growth-wise, all the Voltas, Blue Star or Lloyd are expected to deliver a 20 to 25% of a growth. Now here is important is to look at the margin, who is expected to maintain their margin from here on. And Blue Star, I believe, is better placed in that scenario, that they are the benefit of own manufacturing as well as penetration improvement, market share maintenance, and the margin maintenance is also evident for the Blue Star. So it's a better placed as compared to the others.
All right, Praveen, any view on Whirlpool? Yesterday that was the lone stock that was up, but it's been the biggest underperformer in the last 1 year or so. The stock has halved from the top, but in yesterday's trading session, the one was up close to around 5% or thereabouts. Valuation seemed to be in favor. The stock trades, I think, at around 27 times in comparison to 45 times in the past. The problem's at the promoter end, but any view on the stock at around this 1,050 level?
So we don't track Whirlpool, but overall, general in the category where they are in, that's washing machine and the ref. So those are definitely expected to do well, around 12-13% of a growth in the industry, and being one of the best player in that, and also premiumization is a story. So fundamentally, I'll not see any problem, especially for the Whirlpool. That is only related to the promoter, I believe, whatever the correction is happened for them.
Could it be a strategic fit for any of these players?
No, that's I can't comment on that actually. But yes, the LG is also coming up with an IPO, and I believe this sector, would be in the focus way forward.
Okay.
Okay. All right, Praveen, we'll leave it on that note. Thanks very much for joining in. That's a view on some of the consumer durable stocks, fans, ACs, coolers, as the season is coming in full bloom.